Good morning, traders. Welcome to today's market review. This is Fred Razak at CMTrading. Today is June 21st, 2021, and today is Monday morning. So looking at the highlights of the day, the market sell-off continues. There is no major economic event scheduled for today. So as we look at the various markets, starting out with the currencies, the dollar continues to strengthen. And when we look at the indices, the Dow Jones tanks over 500 points, while the Nasdaq showing some strength. Looking at commodities, oil pretty much unchanged, and gold consolidating at that 1770 level. In terms of the stocks, it's the big tech stocks that remain strong and holding up the Nasdaq. Now, lastly, looking at cryptocurrencies, Bitcoin ranges right in the middle. So we're going to take a look at the markets and see what we can expect from today's trading. So here we go, looking at a weekly chart of the Eur Usd. Look at this nosedive. I mean, this was just like a layup almost with this 122.66 double top, and then this, bouncing right here at a previous resistance level, subsequent support. So this is where I'm expecting we have a bounce. Now I'm expecting somewhere around this area for it to bounce up until here. So it's a decent enough move, almost 100 pips. Okay, if we do get that later in going into today. Now looking at the Aussie dollar, same story, but we're not as weak in the Aussie dollar as we are with the euro. And lastly, looking at Gbp Usd, also on a weekly chart, you could see we nosedived. Okay, but there is some consolidation at this 138.20-ish level, so I do expect a bounce around this area. Now jumping into commodities, looking at gold. Gold tanked last week to 1760, excuse me. But that is, like I said, also previously a resistance area and subsequently a support. So this would really be a place for me to pick it up. Now, I do expect it to bounce up until the 1800-ish level, maybe 1813, somewhere around that area before we consolidate further. Now, looking at oil. Not much doing here, okay? Really, I mean, we had a volatile week last week, okay? A very steep sell-off, but then we had a nice spike. So, week to week, we're really unchanged here as this is showing and continuing to show strength going into the summer months in the Northern Hemisphere. Now, looking at the Dow Jones, look at how depressing this looks. I mean, not depressing, but how disencouraging this is for new record highs. Okay, we did hit that 35,000, 34.816 was that double top, and now we're bouncing off of this area, but this is 2,000 points further down, 1,800 points, okay, in just a matter of a week. Now the real tell sign was when we broke this moving average, okay, and right now I do expect us to bounce off of this area somewhere in the 33,500-ish area. That's where I expect us to be today. So consider that something to happen later today. But when we look at the Nasdaq, it's strong. Didn't even retrace. When we're looking at a daily, I mean, like, this is only 120 points off of its highs. So this is really reflected in the fact that the high-tech stocks are just so strong. Specifically, we mentioned this last week, we're looking at Amazon on its record highs here. Okay, so it's really been very, very strong, but it's got to break to new highs. For us to lift the markets, we need this to break to new highs. If we look at Microsoft, also very strong here, only about $2 away from its all-time highs. So, a little bit of a limelight being shone on the big tech stocks as we're going and seeing this tremendous strength in the markets. Now, looking at the big board stocks, the Dow stocks, specifically the JP Morgans, look how weak it is. 148 down from its 165. But this was really the things that went further down and then leading the market lower. Now, like I said it before, I expect a bounce today. I expect a bounce the next couple of days. It could be just short squeeze, short covering, okay? But I do expect that bounce to happen. So expect some more volatility for a relatively quiet time of the year. This is Fred Razak. I want to wish everybody a great trading day. Thank you.